Good morning, everyone. Happy Veterans Day. Today is Friday, November 11th, 2016. Going to be doing a little recap of the week, talking about a few specific trade setups and kind of making sense of this interesting week in the markets. On the whole, from a technical perspective, there really wasn't a ton of surprises, I guess you could say. Let's see if we can find this a little bit. And if we go out to a weekly chart, coming into the week, we had traded down to the 50% retracement from lows to highs July last year to, or July of earlier this year rather, to our all-time highs that we had. And that 2086.50 traded last week Friday off of, you can pretty clearly see now the breakdown below the support level that we had been holding and testing a bunch of times, and then the descending triangle, the descending trend line of the triangle. So after we broke down, we did reverse right at the 2086.50, right at the next daily big long level, and that retracement has targets up at 2240. Now, following that Monday, the gap up, it made it a little bit tricky to get into the trade unless you were holding SPY overnight or some other instrument. The end of the day on Friday kind of shook out the intraday futures traders, and so the gap left a lot of people hanging out down here by themselves, not in the trade. The Tuesday election had some wild things going on overnight, but in terms of the day's trade, things were actually pretty tame and controlled. Lots of good trade setups all throughout the week, both on the Fibonacci 50% retracements and 5-minute breakout. Thursday we had a great trading session, had a lot of good discussion. I put that recording of the session in the members area, so you can take a look at that and review along with all the other sessions that we've done. And now that we've broken the 50% retracement short, the opposing, we can draw up from lows to highs and allow this market to pull back into the next little bit smaller daily retracement, a 2128.75 as it currently stands, and we'll see if that can take us into new highs. An interesting thing about the way this is setting up, a lot of people might feel like you've missed out on this initial move, but it's important to wait for that pullback in order to establish that higher low. So for those of you who are trading or looking at adding to longer term positions, such as the VGSTX that we talk about, the Vanguard Fund, I'm going to pull up that chart here, and you can see that we've gone down, 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 down. We've started to put in a new rally, but in order to get in the trade, what I will do, or add to the position rather, is wait for the market to pull back and put together close above, one day above the lowest day in this pullback. So just like I'm looking for a break above the high of the low bar in the pullback, it's the exact same concept that I use to add to positions in the longer term investments, if you will. So I would like us to come up and break the swing high, and when we do that, pulling back, adding to the position above the high of the lowest day in the pullback is all that I'll need for an entry into adding some more shares. For the SPY in terms of volume, pretty strong on this move up. And so there's a lot of good things in terms of intraday trades and market action that we've been able to capitalize on here in the last week or so. One thing I wanted to talk about that I do get a question a lot is when we get this double bottom scenario and then we rally and break a swing high, typically that's a really great opportunity to get in the first setup in the new trend. So we have a double bottom, we break the swing high, could be the start of a new trend, so getting in right away in the first long setup is a great opportunity. But sometimes we get scenarios where we have a larger setup above us. So how do we know when to pass on those trades? Well, what I do is just allow whichever setup trades first to be the deciding factor. So if we would have come down this morning, so this is today's ES chart, if we would have come down this morning, put in this double bottom, and rallied and broke the 61.8 of the opposing, then absolutely I'd be behind, dragging from lows to highs and taking that first long setup. But because we stopped at the 50% retracement short, exactly in reversed, then that negates the long setup. And even if you're not necessarily taking the short setup, it keeps you out of the long setup that, in this case, ended up failing. So when you're looking at, do I go long or do I go short? Do I put my limit at the long or short? When I don't know which one's going to trade, the easy way to decide is just to trade whichever one trades first. So in this case, you could either look at the short to trade, and if it doesn't, meaning if we did not rally into the 50% retracement short, then that would have meant we would have not broken the swing high, and we could have drawn the same short up to whatever the next lows ended up being. But in this case, since we did break the swing high and we touched the short, then that negates the long setup. So if you want to get a recap of yesterday's trades, feel free to jump over to the emoneymind.com/VIP and log in to the dashboard, and you can get the recording from yesterday's trade along with tons of other video instructions on how I'm entering my trades every day in the markets. And with that, I hope everyone has a great weekend, and we will talk to you on Monday.